BigBear.ai, ticker BBAI, is currently trading live at $6.90, up about 1.77% on the day as of 12:39 p.m. Eastern Time. The stock has been volatile, hitting a high of $7.07 and a low of $6.68. And what's really catching my eye is the volume. We are seeing massive volume, already approaching 57 million shares traded, which absolutely dwarfs its average. When you see volume like that, it tells you there is a major disagreement in the market. The immediate expectation for many watching this stock is that it's the next Palantir, a small-cap AI company poised to capture massive government and defense contracts. The recent string of press releases, from the T-second partnership for Edge AI in the military to biometric deployments at O'Hare Airport, certainly paints a picture of a company on the move. But the reality of the situation, the thing that this enormous volume is trying to figure out, is whether the company's fundamentals can ever catch up to its narrative. Let's establish the common ground. The belief is that BigBear.ai is perfectly positioned. It provides AI-powered decision intelligence, focusing on national security, defense, and supply chains. It's not a broad commercial play like C3.ai. It's a focused instrument for government work, which investors love because it suggests sticky, long-term, high-value contracts. When the company announced a partnership with T-second a couple of weeks ago, the stock exploded over 20% in a day. People are betting on the idea of BigBear.ai. They are betting on the GSA Oasis Plus contract vehicle opening doors, on the U.S. Navy partnership expanding, and on the One Big Beautiful Bill, or OB3, finally unleashing a torrent of government spending on AI capabilities that BBAI is built to capture. That is the expectation. Now, here is the reality, and it's a harsh one. The expectation of growth is running headfirst into the reality of the last earnings report. The second quarter of 2025 was, to put it politely, a catastrophe. Revenue didn't just miss expectations, it missed by 21%. It also represented an 18% decline from the previous year. Earnings per share missed forecasts by over 1,000%. This wasn't a small stumble, it was a full-on collapse in reported performance. The company posted a staggering net loss of $228.6 million. Making matters worse, management completely withdrew its adjusted EBITDA guidance for the year, citing disruptions and reduced activity in its U.S. Army contracts. So while the market is cheering new forward-looking partnerships, the company's actual existing business was shrinking. This is the central conflict for BBAI. The stock is trading at a valuation that is completely detached from its current financial health. We're talking a forward price-to-sales multiple somewhere between 13 and 17x, depending on which estimate you use, all for a company with negative margins and declining revenue. This brings us to the short-selling activity, which is a critical piece of this puzzle. Given those terrible fundamentals, you would expect bears to be circling, and they are. The official short interest is high, hovering around 19% of the float. That means nearly 1 out of every publicly available share is being held by someone betting the price will go down. This is where many retail investors get excited, looking for a potential squeeze. But we have to look deeper. The actionable data here tells a different story. First, look at the cost to borrow. The fee for borrowing BBAI shares to short them is currently very low, sitting under 1%. This tells us that large institutions are not scrambling or paying a premium to bet against it. It's an easy, cheap stock to short.
Second, look at the days-to-cover ratio. At around 1 or even less, it means that with today's massive volume, every single short seller could theoretically close their position in a single day. This is not the setup for a sustained squeeze, as there is no panic and no trapped short sellers. What is more interesting, however, is the fail-to-deliver data from September. We saw several days with massive FTDs, including one day with 1.8 million shares failing to deliver, and another with 901,000. This often happens in volatile stocks and can point to settlement issues or more complex market mechanics. And it's something retail investors on platforms like Reddit and X are watching closely. The off-exchange short volume ratio is also high, consistently above 40%, meaning a significant portion of the shorting activity is happening away from the public eye in dark pools. What's your take on the 19% short interest? Is this smart money betting against a massive valuation? Or is it a sign of manipulation holding the stock down? Let me know in the comments. The short thesis is straightforward. BBAI is burning cash. Its valuation is disconnected from its financials, and its core business has shown weakness. The company does have a strong cash position of around $390 million, but that came from an at-the-market offering, essentially diluting shareholders to fill the bank account. The question is how long that cash will last if net losses continue at this pace. So what does this company actually do? Unlike Palantir, which aims to be a full-scale operating system for an entire organization, BigBear.ai focuses on more modular plug-in solutions. Its goal is to provide AI analytics that can be integrated into a client's existing software infrastructure. This is appealing, especially for government agencies that can't or won't rip out their entire legacy systems. The acquisition of Pangiam last March gave them a significant boost in computer vision and biometric identity, which is what led to the O'Hare Airport deployment. This is a legitimate and promising area of the business, focusing on digital identity solutions. The problem is that these new ventures are not yet generating enough revenue to offset the weakness in their larger established defense contracts. Looking at the recent stock movement, the action is all about sentiment. The 22% spike on the T-Second news was pure narrative trading. The stock has climbed almost 10% in the last month, even with the awful Q2 report hanging over it. This tells you that the market has, for now, decided to completely ignore the past and trade only on the potential future. Analyst ratings reflect this disconnect. The consensus price target is actually below where the stock is trading right now. Most analysts have a hold rating, with mean targets around $4.85 to $6. The most bullish firm, H.C. Wainwright, has an $8 target, but they are an outlier. The market is essentially disagreeing with the average analyst and siding with the most bullish possible interpretation of the future. We also cannot ignore the legal investigation that was reported last week, looking into potentially misleading statements made regarding convertible notes. This adds another layer of risk and uncertainty to the story, giving bears more ammunition. Everything now hinges on the future outlook. The single most important date for this company is November 10th, when it is scheduled to report its third quarter 2025 results. This will be the moment of truth. The expectation is that the worst is over. The hope is that the U.S. Army contract issues are resolved and that these new partnerships are beginning to show up as actual revenue, or at least in the booked backlog. The company guided for $125 million to $140 million in revenue for the full year 2AN. They must show a clear path to hitting that lowered target. If they report another quarter of declining revenue, or worse, lower their guidance again, The narrative that is holding this stock up could break. The $390 million in cash gives them a lifeline, but it is not infinite. The bull case scenario is that Q2 was a temporary problem, a blip caused by government funding delays. The bulls see the recent contract wins as the start of the real growth, and they believe the November 10th earnings will confirm this. The bear case scenario is that the Q2 decline is the new reality, that the company is struggling to compete, that its valuation is unsustainable, and that it is burning through its cash with no clear path to profitability. The short sellers are betting on this. As an investor, the only way to navigate this is to understand the data. You can find short interest data on